Alrighty traders, George here in time for a look at the week ahead. I thought we would do something a little bit different. I've got 3 stocks to show you. These have a tie into commodities. Just to note that these are 3 stocks in slightly different sectors that have sold off quite a bit in light of where a lot of other stocks have rallied very strong. So here we'll start with DuPont. This is the balance beam model. So these spikes off to the left, this is where all the key trading commitment is. Mon pa traders all the way up to the big houses. All right, now this thing went up to some new structure highs here at about 76, but it broke down, was not able to hold these higher levels as support, and it really fell all the way through. Where things got nasty for it, outside of this very steep sell-off, is the bulls could not bounce it at the ceiling of this key balance beam. Very dense from about 44 to about 52s. They could not find a bounce there at all, and we've driven deeper into this range. This spike here is the most dominant traded and most intensely traded area here, coming in right about where it is now in the mid 47s. And so what I'm looking at here is, will we find a stall out and a pop? The bulls taking it over 48 is what I want to see here, getting it over this little shelf. If they do, driving it up to the low 50s for the first target to watch. If they can get it back over about 51s, that opens up the door to revisit where they came from, these 2 key zones to watch, 55s and 63s. If the bears break it below mid 46s, which they don't have much more to do, they're getting below this spike, and there's a good shot we'll fill to the floor here, which is at about 44 even. And below that, down to about low 42s. You'll notice that below 44, the balance beam commitments taper off quite a bit. We've broken below this area before and recovered and had some pretty good pops. That could be something that also sets up as a break to new lows here and then a recovery. The other one I want to look at is Halliburton. This is a weekly chart on the balance beam model, and you can see Halliburton's also not been able to hold a key balance beam prior to where it is now. It's driven to some new structure lows. It's pushing right back to where it came from. And to see this thing pop up about another $1.50 or so, get it over the open of this week's candle, get it over 36s, it could fill back up to this zone here, about a 12% pop to do that. Basically getting below 32 puts us below this floor here, and if we start trading below that, we could actually see a pretty big move down in Halliburton. The trading commitment drops off, and outside of a quick recovery of this zone here, that could also lead to some new lows. This is a real nasty rejection of this support area here, and we're actually driving back down after finding a bounce at this level. The whole point of me showing you these videos is to show you the power of trading what you see and using our models here, the balance beam, and then in the live room the DSR for intraday. Everything that we do is based on what we see. Nothing has to do with fundamentals, emotion, or anything else. Last one I want to finish off with is Freeport, another key victim of people that trade off of their idea of fundamentals. With the gold component here, the copper component, this thing's down to $9, okay? People buying these types of stocks in a bull market are focused on the wrong stuff. Okay, this is a true bear continuation pattern. It has not yet put in a bounce of any note whatsoever. It's higher on the left, it's lower on the right. As this one goes, there's a lot of trading commitment here at $10. It's got to trade a little bit over that to clear it, and if it does, it could actually give a pretty good pop here. However, let's check this out on the monthly. Trading commitment drops off the map here. Doesn't matter that it's at 9 because it can go to 1. It can go to 0.50. This is just like any other trading instrument that's done the same thing in light of traders saying, well, it can't go any lower, right? And here's where you gauge that weakness. It's coming right up. It's less than $1 away, and we get down below, basically we get below $8.30, and we break below this spike here. This spike here largely contributed by this last move down here and the pop. So if we start trading back below that, that means everybody that just did some business down here, price is below that. And that's going to be really rough for traders that just went long here, anywhere from 8s up to 12s or so. All of a sudden they're going to be underwater. Some of them may have been in the money. Now they're going to be underwater. When do they move from pain to pleasure? You're going to hold it to 7, to 6, to 5? That could be coming. So you really got to watch this one. This is a really horrible looking pattern here. They've completely rejected the most dominant trading zone here, and they're fighting like crazy to find something down here in the $9 range to offer support. So that's a nasty look at Freeport there. Definitely the worst of the 3. DuPont probably looks the strongest. Halliburton's got to make a stand where it is right now. These all have a tie into commodities, but you should only think about these stocks as trading instruments. All right, use the link at the bottom of the video. Hop in the live room. We can talk about this concept more. You'll see me do some day trading and some more big picture analysis on other stocks. But for this week, I wanted to give you guys a visual read on these three key stocks here, and we'll keep a tab on them and see how they perform in the weeks to come. And until then, I'll see you guys back in the live room.